Hello, this video is the last in the series for the credit management, looking at task 6 of the second AAT sample assessment. So it's only a 12 marker and it looks like it's going to be 10 marks talking about best course of action for a couple of companies. Just going to have a look at the first. Well, I didn't actually do a video for this, but yeah, very, very similar. First customer, 5 marks, second customer, 5 marks, and then a couple of computer mark questions. So exactly the same format in both of the AAT practice papers, which suggests to me that the real one will probably be the same. So ABM Limited manufactures engines and other components for the motor industry. VAT is charged at the standard rate of 20% on all supplies. The company includes the following as part of its credit control procedures. It offers 30-day credit terms from the invoice date to all its approved credit customers. It includes an all monies retention of title clause as part of its standard terms of trade. So just a reminder that there's two sort of types of retention of title. There's the specific one, which means that if you have sold some goods to a customer and they don't pay, you have to go and find those exact goods to retain title and bring back and sort of claim your right to ownership. If, on the other hand, it's an all monies retention title clause, then that means that if they owe you anything and you can go and find any of your company's items on their premises, then you can recover those items. Right, so the all monies is the better one, really, if assuming you're doing the selling, of course. So it goes on. ABM has a unique identification code included on all engines it produces, but not all components produced carry this unique identification. So you're in a pretty good spot if you've sold the business engines, because you can pretty much go and identify them. It has a credit insurance policy that covers certain named customers. The insurance covers 85% of the net debt, because of course the VAT will be able to be reclaimed from HMRC once the debt is more than 6 months old and it has been written off in your accounts. You work in the finance department of ABM, and part of your duties includes assisting with credit control when this is required. The credit controller is currently away on holiday, and you have been asked by the finance manager to review 2 customer accounts that may now be a concern. The finance manager has asked you to summarise in a report the outcome and recommendations of your review regarding these 2 accounts. Right, so we've got SPX Motor Company. ABM has received notification that SPX Motor Company has gone into receivership. So you can't take legal action once a business is in receivership, but you can request from the receiver any goods held under a retention of titles clause. And you can in fact sue the receiver if they sell on those goods. The debt outstanding is a whopping 146,400, including that. The receiver is objecting to the retention of titles claim, saying the goods will not be identifiable. Well, if they're engines, they will, because they've been stamped up, or have already been used in the manufacturing process, making it impossible to retrieve without damaging the motor vehicles they have been used in. So if that is the case, then that might be true, but we do have a claim, these engines should be pretty easy to spot. The account is credit insured, so it's one of the ones that's insured. Remember, it's 85% of the net amount. So the question is split between explain the options available to deal with the outstanding amounts, and then recommend provisions for doubtful debts, writing off irrecoverable debts where applicable, and include calculations. Right, so I would say the options. No, I probably wouldn't even say that. I would probably just go straight into it. So something like, whilst the receiver is objecting to the retention of titles clause, if, what's the name of our company? ABM. If ABM Limited have supplied engines, then they are clearly, what was the term that they used? They have a unique identification code with a unique identification code. Try and use the same language that they use. I've supplied it then, and there is a possibility that components may be identifiable also. We should therefore check recent sales invoices to SPX and establish what items they are likely to be holding. Because we have an all monies retention of title clause, this means we can recover any of ABM's products against the outstanding amounts. Notably, if the receiver does sell any of ABM's assets, then they can be sued. We should consider a visit to the premises to assist in the identification of assets sold by ABM. Right, so anything else? So we talked about the retention of title. It's only 3 marks for this bit. I've got to do the recommendation in the same box. So with regard to the write-off, so if ABM is unsuccessful in obtaining assets to the value of the debt, then a provision would have to be made. They didn't include calculation, so let's work out the VAT. So 146,400 divided by 6 is 24,400. Assuming the debt ends up being written off and is more than 6 months overdue, 24,400 can be reclaimed from HMRC. Right, so I'm just going to cast my eye down that's what I've written in its entirety. I'm just going to have a little skim of their answer and see if there's anything else that they've said. So there were 3 marks for the options, 2 marks for the provisions. On their mark scheme, 1, 2, 3, 4, there were 10 marks available, plus any other relevant points may be awarded marks. So, you know, there's plenty to say to pick up these marks on this credit and debt management exam, it would appear. One point they've made that I didn't, which is if the retentions of title is unenforceable, i.e. we can't find our items, then we would be classed as an unsecured creditor. It would then be necessary to claim on the insurance, I didn't say that, did I? For £103,700, which is 85% of the net. That's quite a bad oversight on my part. Let's just add that in now. So we could say 85% of the net amount, which works out to be 103,700, could be claimed on the insurance. Other than that, you know, I said plenty. I think I would have got the maximum 5 marks even without making that sort of quite important point. Okay, second customer, the Really Special Motor Company. This is a long-standing customer of ABM Limited and has always paid to terms. The Really Special Motor Company are also responsible for approximately 15% of the annual turnover of ABM Limited. The company is refusing to pay for an invoice from last month dated the 21st of August for 5,760, including that, as they have claimed that the incorrect components were delivered. The company said they had ordered component C3255, but component C3525 was delivered. This information has only come to light after ABM Limited contacted the company with a telephone reminder when the debt was 7 days overdue. So a bit bad that the Really Special Motor Company didn't think to notify us that the wrong thing was delivered so that we could have rectified it. But it also begs the question, well, where was the delivery note, internal control? You know, did they accept the item that was delivered? The Really Special Motor Company are asking for the incorrect components to be collected at no additional cost and a credit note to be issued. So options available to deal with the outstanding amounts with recommendations for provisions, same again. So firstly, ABM should review its own documentation, such as customer order, dispatch note, and goods received note, to try to identify whether or not the correct goods were dispatched. It is strange that the really, what are they called? The Really Special Motor Company, it's a bit of a mouthful, isn't it? Did not think to advise ABM of the dispute until the payment was being chased. Assuming it is found that the incorrect items were delivered, then ABM must apologise and send and collect the unwanted goods, issue a credit note, and not charge the customer for the return. Conversely, if it is found that the correct, or let's say that the items delivered agreed to the order and goods received note and were accepted by the customer, then the debt should be chased in the usual way, following credit control policy. If it remains uncertain as to who is right and who is wrong, then we should consider appeasing this customer because they are so important to ABM, and the amount in dispute is relatively small compared to the amount of business they bring. As a goodwill gesture, we might abide by their request. So, whether or not we need a provision will depend on the outcome of the investigation. It is most likely that a credit note will end up being issued either because the customer was right or because we decide to keep them happy. Right, reasonably happy with that. So let me look at the AAT's suggested answer again. I'll just have a look and see if there's anything significant that I missed this time. It is our fault, credit note, yeah. Yeah, they've made the point about, they've said if it is not our fault, then strictly speaking, Really Special Motor Company should settle the invoice as soon as possible to honour their contractual terms, or we could take the goods back but charge them for collecting them. So we feel a bit better because we got one over. However, the customer is a long established customer and also provides approximately 15% of our turnover. I didn't specify that, that might have been good to do. Talking about gesture of goodwill, issue a credit note. It does say remind the customer to let us know of any issues immediately for future orders. And it simply says for the provision, there is no need to make a provision for this debt in the accounts. Again, 5 marks available. 1, 2, 3, 4, 5, 6, 7, 8. 8 sort of possible suggested marks with any other relevant points may be awarded marks statement at the bottom for the examiner. It is now 31st of October and the credit controller is reviewing the overall receivables balance, which is 326,550. He is considering using the 80-20 rule in chasing the balances that are due. So just a reminder, the 80-20 rule is where sort of 80% of your business comes from 20% of your customers. I often use this with exam technique to say that, you know, you will get through 80% of the syllabus in 20% of the available time. And if you want that distinction, you need to put in the other 80% of the time to pick up that other little 20%. So 80-20 rule, personal favourite. So identify the likely outcome for ABM if the 80-20 rule is applied. So the 80-20 rule means that I need to work out 80% of my receivables, which comes to 326,550. 80%, that comes to 261,240. Could probably have guessed that by looking. And that will be received from just 20% of our customers. So that's where we need to focus our efforts. And finally, if the credit controller does decide to act on the request of the sales manager and delay the usual credit control procedures in chasing the debt owed by the customer, it will breach the ethical principle of, it's not confidentiality because no one's telling anyone something they shouldn't. Objectivity. Yes, because it's not being fair, it's being biased. So I think it will be objectivity. Professional behaviour is more about breaking the law and the regulations, bringing the profession into disrepute. So I'm happy. Objectivity. Yeah. And there we finish task 6.